Hedera just rolled out one of the most powerful upgrades in crypto infrastructure, and barely anyone's talking about it. While everyone's distracted by price charts, Hedera quietly introduced batch transactions that could make Ethereum's smart contracts look outdated. But here's where it gets interesting. HBAR just survived a brutal $200 million liquidation event, and traders are sitting on the sidelines like they're watching a horror movie. The technology screams buy, but the charts are whispering something else entirely. So what's really going on here? What's up, crypto fam? Welcome back to the channel where we cut through the noise and give you the real analysis that actually matters. If you're new here, smash that subscribe button and hit the bell icon because we're diving deep into stories the mainstream crypto media completely misses. And if this video helps you understand what's happening with HBAR, throw me a like. It genuinely helps push this content to more people who need to see it. Alright, let's get into this. On October 13th, 2025, Hedera announced something called HIP 551, introducing batch transactions with native atomic execution. Now before your eyes glaze over thinking this is just another technical update, let me explain why this matters. According to Hedera's official announcement, developers can now execute multiple operations as a single atomic transaction without needing smart contracts. Think about that for a second. No Solidity code, no gas wars, no vulnerabilities from poorly written contracts. This isn't just an incremental improvement, it's a fundamental shift in how blockchain operations work. Hedera's basically saying, why overcomplicate things with smart contracts when we can do it natively? And honestly, that's a fair question. The crypto space has become so obsessed with EVM compatibility that we forgot to ask if there's a better way. Here's what makes this wild: batch transactions can bundle up to 50 operations into one atomic unit. Either everything executes perfectly, or nothing happens at all. No partial failures, no weird edge cases where half your transaction completes and the other half doesn't. It's all or nothing, baby. Let me break down what HIP 551 actually does, because the technical foundation here is legitimately impressive. Hedera uses something called Atomic Batch Transaction Body that processes multiple internal transactions together. Each transaction still carries its own authorization, fee, and signature, so we're not sacrificing security for convenience. The really clever part? Every transaction must include a batch key to confirm grouping and establish what Hedera calls a chain of trust. Inner transactions can't be batches themselves, which prevents that Inception-style nesting nightmare that could crash networks. They must carry unique IDs and can't be scheduled. Transactions execute in order, each creating its own record and receipt. Now here's where Hedera made a controversial but, honestly, pretty smart choice. If one transaction fails, everything rolls back, but the network still charges you the attempt fee. Some people hate this, but I actually think it's brilliant. It maintains economic fairness and, prevents spam attacks where someone could clog the network with intentionally failing batch transactions. Basically, you pay for what you attempt, not just what succeeds. Each batch maxes out at 50 internal transactions with a 6 kilobyte size limit. This isn't arbitrary. It ensures reliable performance without overloading nodes. And, yeah, developers can track everything through the Mirror Node API, which logs the parent consensus timestamp, linking each internal transaction back to its main batch. For enterprise applications, this level of transparency is absolutely critical. According to Hedera's technical documentation, HIP 551 simplifies on-chain operations that previously required complex smart contracts. In a single batch, you can unfreeze an account, transfer tokens, and freeze it again. Why would you want this? Soulbound tokens, non-transferable digital assets that could, really revolutionize credentials, certifications, and identity verification. So, the entire process runs atomically, which basically means there aren't any weird security gaps to worry about. In my expert opinion, this is honestly where Hedera starts eating Ethereum's lunch. Developers can actually combine token minting, wiping, and transferring all in one operation. Treasury management just becomes, stupid simple. Compliance tasks that used to require multiple transactions with potential failure points, now, they're done in one atomic operation. But wait, it gets better. You can mix workflows, updating consensus topics while transferring tokens in the same transaction. For enterprise applications, this is massive. Imagine KYC approval, transfer, and potential revocation happening in a single atomic step. There are just no gaps where assets can slip through during restriction periods. Plus, there aren't any vulnerabilities from timing attacks either. A blockchain analyst would probably point out that this makes Hedera significantly more attractive for regulated institutions. And honestly, they'd be right. Banks and enterprises, they really hate uncertainty. What they need are guarantees. and atomic execution provides exactly that. Now here's where the story gets uncomfortable. Despite this technological breakthrough, HBAR traders are acting like someone just announced bankruptcy. The futures market got absolutely demolished. Over $200 million in liquidations in a single day. That's not a correction, that's a massacre. Open interest crashed to $202 million, and it's just sitting there like a dead fish. According to on-chain data, open interest hasn't recovered at all, even though spot trading is showing some signs of life. This tells us something crucial. Derivatives traders, the so-called smart money, aren't convinced yet. Why the skepticism? Well, futures traders are forward-looking, they're betting on near-term price action, and right now they're basically saying no thanks. Their hesitation actually creates a self-fulfilling prophecy. Without futures activity reinforcing bullish momentum, price recovery stalls. It's like trying to start a fire with wet wood. But here's where it gets interesting. The Chaikin money flow indicator has spiked significantly since the crash. This measures buying and selling pressure, and right now it's screaming that spot investors are accumulating. You know, long-term holders and those smart, opportunistic buyers are really loading up at these prices. In my analysis, this creates a fascinating divergence. Spot buyers, they see value, while futures traders, well, they see risk. So who's right? Well, historically, when CMF spikes like this, it indicates strong conviction from holders who aren't worried about short-term volatility. But, and this is important, CMF is approaching 0.20, which is historically a saturation mark where inflows slow and reversals can occur. HBAR gained 14% since the crash and currently trades at 18.7 cents. According to technical analysis, it's attempting to establish 18.8 cents as a support floor. This level is absolutely critical. If we can hold it, recovery continues, but if we break it, then we're looking at 18 cents or even lower. The altcoin dropped 25% during the crash, which means a full rebound requires reclaiming 21.9 cents. That's a 17% move from current levels. Not impossible, but it does need cooperation between spot and futures markets. Right now, they're not talking to each other. If HBAR receives renewed backing from investors, particularly if futures traders finally wake up and smell the technological coffee, we could see it breach 0.198 resistance. That would open the door to 0.205, signaling legitimate bullish strength returning. But let's be real, without futures market participation, this recovery feels pretty fragile. Spot volume alone rarely sustains major rallies in volatile markets. Honestly, we need derivatives traders to stop being scared and recognize what Hedera's building here. Here's my honest opinion. Hedera just delivered one of the most underrated technological upgrades in crypto, and the market is completely mispricing it. HIP 551 solves real problems that enterprises actually care about. Atomic execution without smart contracts. That's not just innovative, it's potentially revolutionary for institutional adoption. But hey, technology doesn't automatically translate to price action, especially in the short term. The crypto market is sentiment-driven, and right now, sentiment around HBAR is cautious at best, terrified at worst. Those $200 million in liquidations left psychological scars. However, if you zoom out, this sets up an interesting asymmetric opportunity. Spot holders are accumulating while futures traders sleep on it. Eventually, price catches up to fundamentals. The question is timing. Watch that 0.188 support level closely. If it holds through this week, confidence builds. If futures open interest starts climbing, even slightly, that's your signal that smart money is returning. And if Hedera continues shipping updates like this, institutional interest becomes inevitable. The technology screams long-term bullish, the charts scream short-term uncertain, position accordingly. Alright, that's the full picture on Hedera's massive upgrade and, why HBAR's price action doesn't really match the technological breakthrough. And seriously, subscribe if you haven't already. We're covering stories like this that, honestly, other channels completely ignore. Drop a comment below. Are you bullish on HBAR's technology despite the shaky price action, or are you waiting for futures traders to confirm the bottom? I read every comment and, yeah, I love hearing your perspectives. Thanks for watching, and I'll catch you in the next one. Remember, cryptocurrency investments carry significant risk. This video is educational content and analysis, not financial advice. Always do your own research, understand the risks, and never invest more than you can afford to lose. HBAR and all cryptocurrencies are highly volatile assets. Trade responsibly.